Each day, I try to go over where we are on our home loan interest rates and teach a little bit about why we are where we are and what to expect for the future. And along the way, I try to give you a little bit of tidbits or nuggets or rules of thumb that you can use when you start to project what you think is going to happen. Today, at the end of the video, I'm going to give you a great rule of thumb that I use and that you can hold on to and know a little bit more about. I think that you're going to find it valuable. Also, when we look at our home loan interest rates, I want to give you a little bit of a heads up that you're going to be very, very happy at where our 30-year fixed conventional rate is today. It is an exciting moment again. But let's go over here, first of all, and look at what is today. Today is December the 7th, 2022. It is now 4:10 p.m. Central Time. So a quick history lesson. Let's remember, what is December the 7th? What is the significance of that day? December the 7th, 1941 was the attack on Pearl Harbor where 2,400 people were killed. So that's something that we should always reflect on and think about for a moment, as well as all that happened after that with World War II. Interesting day that I think some people are starting to forget that December 7th was the date of the attack on Pearl Harbor. Anyway, let's get back over here and take a look at where we are on home loan interest rates. Again, we're having a very good day today, and home loan interest rates are showing better results than even the charts. We're up 19 basis points right now on our mortgage-backed security. We're down 9 on our 10-year treasury. So let's take a look here at the charts just quickly, because this is going to tell us a lot about what we're going to use with our rule of thumb. So right now, take a look again. Do technical indicators and technical statistics work? Take a look at this. The 100-day moving average is just acting as this complete floor of support. But that's great news because it is a floor of support, not a ceiling of resistance, which is poising us for taking a breath and then going up higher, which is what we want. This brings home loan interest rates down. We want to get up to this Fibonacci level at 102.788, where I believe we will be in the mid to low 5% on the Brent Bruce Daily once we hit this range here. So you can look forward to that. But I want to take a little bit of a longer time and look at the 10-year treasury, because this is the rule of thumb. So the rule of thumb that I want you to remember today is that in general, home loan interest rates tend to ride at 2%, like 1.7% to 2.0% above the 10-year treasury. So for instance, if that was the case, today would be at 5.42. If we were 2% over, maybe a little bit less. That is a good rule of thumb. And that is why we pay attention to the 10-year treasury. Why is that? Because the 10-year treasury is about the same length of term that a mortgage usually hangs around before it gets paid off through refinancing or sale. So it has to do with the valuation of a mortgage-backed security. Even though it's a 30-year mortgage-backed security, they know that it doesn't usually last that long. That's why they tend to compete, the 10-year treasury and the mortgage-backed security. But it traditionally rides at a little bit higher rate, so about 2% over. Now, we're not there right now. We're not sitting at 5.42%. But let's take a look here, and I'll show you the validity of that rule of thumb. So let's go down here to our 10-year treasury chart. Right now, you can see we just broke below the 100-day moving average, and now we are sitting on this Fibonacci level. Again, a technical indicator that's doing a great job helping us to see that. But remember, on this chart, we want the numbers to go down because this is the yield. This is not the price. We'll get into that another day. But the 10-year numbers, we want to go down. All right, so let's take a look here, and let's go back to long time ago. You may remember when home loan interest rates, and I definitely do, when home loan interest rates on a 30-year fixed, the lowest I probably ever offered was about 2.375, 2.5%. on a 30-year fixed conventional loan with no points. And that was probably for like a day. That was probably the lowest I've ever been able to offer. So where was the 10-year treasury in order for us to possibly have been able to offer home loan interest rates that low? Well, let's go back and show a chart all the way back here to March 9th of 2020. Does anybody remember what was going on about that time? Well, the 10-year treasury plummeted to, look at the number, 0.41. The 10-year was at 0.41, and I was offering at that moment probably a 2.375, 2.21. Well, if you did 2% over the 10-year treasury, we would have been at 2.41. So this number tends to be accurate. Right now, that is not the case. We're riding more than 2% above the 10-year treasury because of servicing value. Okay, so there's a value to the servicing of mortgages. To make it simple, it's because the investment community does not believe the home loans that are being written today are going to be around very long. Why would they not be around very long? Because they believe that writing an interest rate, a home loan with an interest rate of 7.5% a couple of months ago, is going to get refinanced soon. So they're believing, that shows their belief also, that home loan interest rates are going to come down. People are not going to stick around with that loan very long, that 7%. So it doesn't have as much value because the investor is not going to have enough months of receiving payments. So all this starts to make sense. All right. So let's take a look and see where we are. So again, the rule of thumb I wanted you to learn was 2% is a good estimation of where the home loan interest rate should be riding above the 10-year. The 10-year right now is at 3.42. So where are we on our Brent Bruce daily home loan interest rates? Let's go ahead and run this number right now. Okay, so we were at what, we were about 6.25% yesterday with no points. Look at that. Back to 5.999, 0 points, a credit of $860. And if we open this up here, what do you know? We can offer 5.625 on a 30-year fixed conventional home loan with just over 1 point that your seller can pay for your buyer. And look, you could go even further if you wanted to. Now, guys, what if you took advantage of a 3-2-1 buy down? If you don't know what that is, watch my videos or reach out to me. A 3-2-1 buy down would make the monthly payment effectively based on a 2.999 interest rate. Did you hear what I just said? Okay. So if you don't understand how that works, you need to give me a call and we could talk more about that. But home loan interest rates are back into the 5s on our conventional. Let's go ahead and take a quick look over here at our FHA. And we are sitting at 5.5% on an FHA 30-year fix. Want to pay a point? You're at 5.25. 5.25, guys. Say bye to the 6s. We're in the 5s now. Very easily getting into the 5s. Let's go back to our scenario, only because I want, for compliance purposes, to show the scenario that I am working with here today. And there it is. That is the scenario for the conventional home loan that I am quoting today for compliance purposes. Guys, let me know if I can help. If you have any questions, if these numbers seem too real to be too low to be real, give me a call. I will show you. I will prove it to you. We're doing these every day, all day, and people are buying houses because we have the rates that people will accept. Let me know if I can help. Make sure that you like, subscribe, and share, and I will talk to you again tomorrow. Welcome back into the 5s, and take a moment and think about all that occurred on December 7th, 1941.